Welcome back. You're watching Trade of the Week. Today we bring you technical analysis of some AI-related stocks, a look at Nvidia, advanced micro devices and Intel as semiconductor beneficiaries, and then Microsoft and Google as software companies. Loyiso Mpeta from Unum Capital's hedge fund brings us that analysis. Loyiso, a pleasure. Good afternoon.
No, likewise. Good afternoon to you too.
All right, great theme. We love AI. Let's talk about these stocks, maybe starting off with Nvidia, which is a company that I keep saying every time I think it has no upside, it has more upside.
Really what we saw from, say, end of 2022 is nothing like we've seen before. I think just the whole AI theme and the way that it has exploded over the last 2 years, some are even calling it the best theme of the century. I mean, we've had various themes over the years. I mean, we saw the dot-com, you know, with the internet boom. But what we're seeing now with AI seems to be one of the most advanced themes, which really, from a use case perspective, could be a theme for a lifetime, really. It's not just something that's going to be around for the next 2 or 3 years. It's really like the rest of our lives that we could be contending with this AI theme. So when I look at it from a technical perspective, I always think it's best to really look at what has now become the market leader when it comes to AI, which is Nvidia. So what I have here is the monthly chart of Nvidia in log scale, going all the way back to 1999 when the stock was initially listed. We can see here we had this big crash in 2002, which was part of the dot-com bubble. And then we also have this big crash here back in November of 2008, which was the global financial crisis. So I've decided to start my wave analysis at this point here, because what we've seen from 2008 has been this prolonged bull market in Nvidia. But again, because this is in log scale, it might confuse some viewers as to the strength of the underlying trend. So I want to emphasize that the recent boom that we've seen that is driven by AI actually started in October 2022 at this point here. And at this point, you can see that the bottom of the stock was at $108 US, and currently it's trading in excess of $1,200. So from October 2022 to date, the stock price has grown over 1,000%, meaning more than tenfold. But when I look at it from a historical perspective, like I say, starting from this November 2008 bottom, I'm seeing a very, very textbook Elliott wave advance, starting with this wave 1 and wave 2. And then what we had from, say, 2011 to 2021 was this very strong 5-wave advance, which was for a higher degree wave 3. And then the correction, which we saw from, say, 346 to 108. So this was a very strong, about 60% decline in the stock price, was actually only for wave 4. And what we've seen now with this massive AI-driven rally is to complete the 5th wave. So the question that one really needs to ask now is, how far has this wave 5 traveled, and could it be at the end of its wave count? So if we zoom in now, just looking at this 5th wave from $108, we can see that this is where most of the stock gains have come since October 2022. But when I look at it again from a wave perspective, I'm seeing this small wave 1, wave 2, and I'm looking at this further advance as another 5-wave advance, but only for a higher degree wave 3. So what I'm forecasting now is another correction for wave 4, which could be similar to this correction before seeing more upside for wave 5. So this being said, I'm still forecasting more upside in Nvidia. I don't think we are anywhere near the peak of this current momentum that we're seeing in the stock. And like we've had before, very, very short-lived pullbacks, which could provide buying opportunities. And I think when you look at the most recent first quarter earnings, which were released a few weeks ago, they beat revenue estimates as well as earnings estimates, and they made an upward revision for Q2, meaning they are forecasting more revenues, more growth in the second quarter. And what's also going to be very, very bullish for the stock is they also announced a 10-to-1 stock split. Now, what drives stock splits is if you look at the share now, it's trading at $1,208. Not many people can afford a stock at 1,208. So what a 10-to-1 stock split is going to do, it's going to take that share price down 10 times, but making 10 times more shares available. So if the stock split were to happen right this very moment, the stock price would go from 1,200 to 120, making it far more affordable for a lot of smaller investors, especially the retail investors, which then also drives more demand and more participation in the stock. So from a stock split perspective, that's going to even drive more interest in Nvidia. So definitely from a price perspective, I'm still seeing a lot more upside in Nvidia.
Means there's hope for people like me, Loyiso. Let's then talk about advanced micro devices. I don't know if you want to speak about it with Intel or separately, because they're both kind of trying to play catch up.
Yeah.
But of course, all of it's still the same story of semiconductors.
Yeah, so actually, I think we can almost talk about them comparatively, because actually, when you look at Intel historically, at one point, they were the market leaders when it comes to semiconductors. And this is why this theme of AI is so crucial, because it shows that not all companies in that space are benefiting from it. You have your leaders and you have your laggards. And you have your innovators and you have those companies which fail to innovate. And actually what we are seeing with Intel is very similar to what we saw in the smartphone boom, where we had BlackBerry and Nokia falling to the wayside and Samsung and Apple taking over the market. So it's pretty much the same story here. And if there's one aspect of risk which investors need to be very wary of, especially from a big tech perspective, is the concentration of the growth story. We have the Magnificent Seven, which is now really the Magnificent Six, if you exclude Tesla. And that's where most of the growth is concentrated, in just those 6 stocks. Now, advanced micro devices is not part of that Magnificent Six, but I think it's playing catch up. But the real contrast is Intel and advanced micro devices have really been sort of at a war between the two of them to be second behind Nvidia in the semiconductor space. So it's interesting what we will see from a technical perspective in terms of the fortunes of the two companies. So starting with advanced micro devices, also going back to October 2022 when this whole boom started, what I'm seeing is the first leg of this advance being a leading diagonal for wave 2, followed by, for wave 1, followed by a small pullback for wave 2. And what we are seeing now is another 5-wave advance, wave 1, 2, very strong third wave, a very strong correction for wave 4, which bottomed around $140. So I'm looking at this now as the early stages of wave 5 to complete the higher degree wave 3, and likewise forecasting further pullback for wave 4 and one more advance for wave 5 to complete the bigger picture 5-wave advance. So looking at advanced micro devices, I think at current levels, say just below 170 per share, there's still potential to see the stock making new all-time highs in the short to medium term. So very bullish on advanced micro devices. And contrast that with Intel. We can see from October 2022, it did have a period where the stock really had a strong run from about $25 to just above 50. But we can see how strong this sell-off has been. And also from a price trend perspective, not much to write home about from a wave perspective. So I don't actually have a wave count on Intel, but we can see from a percentage gain, it has been the worst performer of the three. So again, the the key point to emphasize here is not all semiconductor stocks are going to benefit. You have to really pick the cream of the crop, and as in any other industry, you will have your winners and you will have your losers. So don't just look at the whole AI from a broad perspective, but once you deep dive into company specifics, that's where you're going to pick your winners and avoid the losers.
I agree. I think it's also important for retail investors because you might look at an Intel and think, well, it's cheaper. But of course, it's cheaper because it's not sharing in the story and the trend here.
Exactly.
Also. Well, I also want to speak about generative AI because that's also a very interesting one. And that's closer to home. It feels like it's something that's more tangible to you and me. Yeah,
so I think the whole spectrum of AI really is still in its infant stages. And when you talk about generative AI now, you're even talking about what many call an even smarter type of AI, you know, being machine learning, robotics that can actually teach themselves and advance themselves. So when you look at it now from a software perspective, which is where this sort of plays a key role, this is where your software giants like your Googles, your Amazons, your Alphabets really come to the fore. And within that space, let's start off with Microsoft Corp and look at how that stock has performed. So again, there has been a very, very significant contrast in performance between your software beneficiaries and your semiconductors. So your software, it's more towards your end user markets, whereas your semiconductors is almost like the starting point, your building blocks for your data centers and your processors, etc. So again, going to 2022, in November, when Microsoft bottomed at around $213 US, you can see the stock has had a strong run, but has only doubled in terms of price performance, whereas Nvidia grew 10 times. So this is the significance in performance between the semiconductors and your software players. But I also like Microsoft because I see this wave 1, wave 2, and a very strong rally currently, which I am labeling as wave 3, also unfolding in 5 waves. This is a fairly small correction, but at this point, I will label it as wave 4, and I'm seeing further advance potentially for wave 5. If we do see more sideways movement, I will still label this as wave 4, maybe just consolidating a bit more, but I'm still more bullish on Microsoft. And just to wrap it up from a technical perspective, let's also jump to Alphabet or Google, and similar story. I'm seeing wave 1, wave 2, and again another 5-wave advance for wave 3, followed by a pullback for wave 4, and now I'm seeing more upside to complete the 5th and final wave of this higher degree, wave 5. So I think when you look at the broader AI sort of fundamental backdrop, still a lot of capex being pumped by your big six into data center development, chip development. So from a investment perspective, like I say, I think for the next 2 or 3 years, we could still see significant growth in AI. And the more use cases get developed, then the more demand will AI have. So again, picking the right stocks next 2 to 3 years, I think AI will still be the dominant theme.
Also interesting, Loyiso, and I think it's important because when we, of course, think of themes, like we've mentioned earlier, we thought about the Y2K and, 2000. And of course, this does look like it's different, as you've mentioned there. I'm also keen just to speak on that and maybe even giving some sort of security to many people. This is not a bubble that's going to pop one day.
So on the Bible, I can close my laptop now.
Yes, you can.
On the bubble story, I think what we need to compare between the dot-com bubble of the early 2000s and this bubble, or rather, and this bull market. There is no bubble here. So what you had in the dot-com crash was you had a lot of startups which were borrowing a lot of money to grow their capital expenditure. The borrowings themselves come with interest-bearing responsibilities. In this case, what we are seeing in the AI boom, it's only your big tech companies that are really benefiting from this. Why? Because to build the infrastructure requires very, very large capex. And what your big six have in abundance is free cash flow. And also, when you look at the macro economic backdrop in the US, we have been now in this higher for longer interest rate environment for the last 2 or so years. And what a high interest rate environment does is it makes the cost of capital very, very expensive. So if you want to borrow to fund your capex, you are now borrowing at much, much higher costs, which your small and medium caps simply cannot afford in this current environment. So what inevitably happens is you only have a very, very concentrated portion of the market, which is your big six, that can actually really afford to invest in the AI boom. So again, the concentration is you're looking literally here at 6 companies that are really benefiting and driving S&P and Nasdaq returns and not the broader market. So as a result of that, you don't have a bubble. But what you do have is a concentration of stocks which are benefiting. Whereas, I mean, right now the US indices are really looked at as the Magnificent Seven and the rest of the S&P 493. And that is still pretty much the case. So that is the fundamental difference between the two. But I think what we will see when the Fed does eventually pivot and they start cutting rates, your smaller caps might start to catch up from a share performance perspective, but not so much in terms of them developing their own AI, because the big six right now is so far ahead of the curve and they've got plenty of cash flows, free cash flow, which they use for their capex. So it's going to be very, very difficult for the small players to catch up from an AI development perspective. But I think from a purely share price performance, once we do see the Fed cut rates, then your small and medium caps might start at least getting a boost from that perspective. So definitely not a bubble, but a very, very concentrated market in terms of the big six.
Wonderful, Loyiso. All we have time for today. Thank you for taking us through this one. I think certainly setting the record straight with very important aspects of it. That was Head Fund Manager for Unum Capital, Loyiso Mpeta.